Hello, everyone. Thank you for joining us. We're going to get started with the program. First, some quick notes regarding today's program and reporting for continuing education. Today's program is entitled Boiling It Down, Understanding Liability Coverage Without the Technical Speak. This has been approved for credit through the AIA as a live presentation. Here's the official course number for reference, and we will be recording this webinar for educational streaming purposes. So we'll have a link available on our website if you want to go back and watch it. But do please be aware that the credit is not offered for those who simply watch the recording. Today's live program, however, is indeed worth 0.5 hours as a continuing education credit. In terms of reporting, one logistical note real quick. After the webinar, by the end of today, you will receive a survey link, and Victor policyholders who are also AIA members will we will report your completion of this program to the AIA. But please do provide us with your AIA number in the survey so that we can do so on your behalf. If you are not an AIA member but Victor policyholder, let us know in the survey whether you desire a certificate of participation, and we'll send you one. If you are not a Victor policyholder, no worries. You too are going to receive a survey link after this webinar. And if you'd like, we're happy to send you a certificate of participation or report it to the Institute. If you're an AIA member, just let us know in the survey. There will be a nominal $25 administrative fee, but just let us know and we're happy to follow up. Okay, with that, let's move on to the program. So my name is Yvonne Castillo, and I'm the Director of Risk Management at Victor US. My colleague and co-presenter today is Mark Balon, and he serves as an Assistant Vice President at Victor US and is one of our AE Large Firm Underwriters. What we want to do today, as the title demonstrates, is boil down complicated insurance speak into language that is ordinary and simple to help design firms make good decisions when it comes to liability coverage. If you are already well-versed in liability insurance, this probably is not the webinar for you, because today we are going to be laser focused on making this super simple. We're going to walk through a liability policy at a very high level so that we can make sure you leave here in 30 minutes understanding some of the more important features of coverage for your practice. And we're going to start with just a couple of definitions. So as boring as it may be, the way in which specific terms in your policy are defined actually can dramatically affect outcomes. I'm going to start first with the most fundamental term, and that is the term insured in a professional liability policy. So what you're looking at here is a screenshot of the definition of insured in the Victor policy, because that's what we know, but you'll need, if you're not in our program, look at your policy and look at the definition. As it has always been the case with legal or insurance documents, there's usually long run-on sentences to define basic terms. So to boil it down, you kind of have to really critically sift through the sentences for key words and phrases, and we're going to do that with you today. So here you can see in the blow-up box on the screen that an insured includes the firm named in the policy and partners, officers, directors, members, employees, stockholders, or acquired subsidiaries. But most importantly, it also includes in part 2, you can see there in the box, leased contracted personnel. That's really important. We're going to talk about that in a second, as well as retired partners, officers, directors, etc. in part 3. So you can see for yourself that that one word means a heck of a lot. So in plain English, Mark, as an underwriter, tell us why this particular definition matters so much to design firms.
Thanks, Yvonne. Yes, like you said, the definition of the term insured is extremely important. And as a design firm, you want as many people who touch a project you work on to be covered for their liability. Now, whether that's under your policy or their own policy certainly just depends on the circumstances. In order for a firm or individual to be covered under your policy in the event of a claim, they must meet the definition and requirements for being considered an insured under your policy. Now that's why it's so important. Like Yvonne said, our policy not only provides coverage for employees of your firm, but also now is even more broadly defined to include coverage for contracted personnel under the direct control and supervision of your firm. This expands coverage to those personnel whose income is reported on a 1099 form for tax purposes, which is becoming increasingly common with the growth of the gig economy, as it gives more flexibility to use individually contracted personnel and labor on a project by project basis. Having this language included in your policy form can also lead to increased efficiency during contract negotiations, as it reduces the likelihood of a contracted individual from needing to seek either separate coverage on their own or having an endorsement issued under your policy to make sure they're covered. Yvonne?
Okay, thanks, Mark. All right, so now we know more about who you want to be covered in your professional liability policy, but let's pivot to what kinds of services you want covered, which leads us to the second definition we're going to talk about today. Only two definitions, I promise. And the second definition is professional services. So this is another very basic term in a policy that when you uncover what it actually means, you may be surprised. On this slide, I'm highlighting the definition in the Victor policy, of course. This is another long run-on sentence, but let's boil it down and look at the blow-up box on the right of the screen. The way this definition is written, and I've underlined the more salient words there, it involves services performed for others on behalf of the design firm as an, and this is going to be a lot of words, but as an architect, engineer, interior designer, land surveyor, lead green building program consultant, landscape architect, construction manager, scientist, or technical consultant. So in other words, professional services, as defined in this policy, are those performed in these various disciplines. What's important here is that there's no limiting language whatsoever about the types of, for example, architectural services within these disciplines, nor is there any other qualifying language. So, Mark, the design firm, flesh that out for us from a risk perspective.
Sure. From a risk perspective, the definition here casts a fairly wide net for inclusion of covered services, especially by including the term technical consultants. This is somewhat of a catch-all that, in conjunction with the broadening definition of insured, which we mentioned on the last slide, makes for a very broad policy, which is what a design firm would want in case of a claim to guarantee maximum coverage. One thing that I'd like to point out is that some policy forms in the industry explicitly list a firm's service or services on the declarations page of the policy, for which the policy will provide coverage for only those services. This could potentially be hazardous to coverage in the event that, say, the only service listed is architecture, but on a project your firm is involved with, you've hired a mechanical engineer as a subconsultant. Now, if a claim were to arise from the mechanical engineer's services on that project, despite you holding vicarious liability, there might not be coverage under that policy because mechanical engineering was not explicitly named on the declarations page. Now, to note, this is not how the CNA and Victor policy operates, but it's something to be aware of in the event that either you're not with our program or you're hiring subconsultants or being hired as a subconsultant, as that could affect the outcome of a claim.
Okay. Thanks. Yeah, thanks, Mark. Okay, so let's move on to the policy provisions themselves relating to who pays what and when. Mark, at a high level, when a claim arises, design firms are justifiably going to be worried about costs. I'll turn it to you to talk through some important provisions on this.
Yes, everybody's always concerned about cost, and there are quite a few features in professional liability policies that can be important to firms when it comes to limiting those costs. Now, everyone has different priorities and preferences when it comes to the coverages that they think they need. Today, I want to focus on two items in the professional liability world, one being hammer clauses and two being defense outside the limits. Now, to start off here, a hammer clause is a statement in a policy that allows an insurance carrier to settle a claim on behalf of an insured firm without their consent. Now, the latter part there is the key, without their consent or your consent. Or in the case of a partial hammer clause, to contribute no more money to a claim than they feel would have been needed to be contributed if they had settled. Now, the intent behind such a clause is to minimize as much expense as possible on the insurer's side. In reality, this truly limits the design firm's input into how a claim is handled and or settled or taken to trial. And as with every dispute, there's the potential for a firm's reputation to be on the line, which could not only impact the current contract, certainly, but future contracts as well. Now, not having a hammer clause in a policy allows an insured to have a say in if, when, and how a claim is to be settled. It's important to know whether or not your policy contains a hammer clause, and in the case that it does contain one, whether it is a full or partial clause, as that could affect your input into a claim and how it's handled. I will note that the CNA and Victor policy does not contain one, and the reasoning behind that is that we acknowledge that it's important for our insureds to be involved in determining how a claim is handled. Continuing on to the second item here that I want to address, defense outside the limits. Of course, with any claim, defense costs can be significant, and defense outside the limits is a relatively new feature to the professional liability world, but certainly important nonetheless. The coverage provides funds in addition to the standard limits of liability in a professional liability policy. And these additional limits are reserved solely for the paying of defense costs on a claim. And this can be important, especially for firms with lower limits, as it acts as a safety net to ensure there is money available to pay the legal expenses. In turn, this helps to preserve the standard policy limits for a longer period of time. Should a large indemnity payment need to be made, this can help to make sure there's funds reserved for that. The coverage is available and is intended to be used in conjunction with firms with billings typically below $1 million annually. Any other questions here, Yvonne?
No, that's it. Thank you. All right, great. All right, so let's move on to another concept, and that is rectification. So this is really, really important because this is a new development in the Victor policy, but it's also really unique in the industry. So if you take anything out of these away from these 30 minutes with us, this is the one you really need to pay attention to. So you might be thinking rectification relates to contractors more than design firms, but that's not what we're talking about. Here's the reason. In this instance, what we're talking about is design defects, not construction defects. So on the screen, you can see another screenshot of page 4 of the Victor policy. I've blown up a portion of the definition of rectification expense. You can see it's a lot longer. And policyholders, please, our Victor policyholders, please read it. We can't just take the blow up and take that at face value. But for purposes of today, in keeping with trying to keep things simple and just helping you understand the intent behind this type of new coverage, we're going to boil this down. So this kind of coverage is important to design firms because it provides insurance coverage for fixing design defects that could turn into much bigger problems down the road if, for example, they were to become a full-fledged claim against you. To me, it's the equivalent of, and you may have heard the U.S. Homeland Security slogan say, it says, if you see something, say something. Well, it's the same thing, but in the insurance world. That's essentially what this is. So in other words, if you catch a problem early, and it's some sort of design problem, something you did wrong, then say something to your carrier, because there's now coverage there. Oops, sorry, I think I switched slides. Because there's now coverage there to help you access funds to fix the problem. And the other important thing about this is this kind of coverage, our hope is that it helps you keep projects moving forward, because if you're able to resolve them quicker before they become claims, you can keep the project moving forward. It helps, we hope, to help you maintain stronger trusted relationships with other project stakeholders. So it's just a way to help you hopefully fix things early before they become claims. And I'm going to turn this over to Mark, because he's going to give us a scenario to understand how this coverage might be triggered. Mark?
Sure. And this is a question that we commonly get. People know that this is in their policy, but aren't quite sure how it might operate in reality. So let's say on a project, an engineer specified HVAC equipment that was too big for the space in the ceiling. Then the contractor purchases that equipment, and at the time of installation realizes the equipment is too large and tells the engineer that it won't fit. Well, the contractor can then attempt to return the equipment, but if for whatever reason the manufacturer refuses to take it back, everybody's kind of in a pickle. So in this scenario, if the engineering firm's professional liability policy provides for rectification coverage, they could potentially reach out to their carrier about the mistake preemptively before a claim is made. And if the terms of coverage are met, the insured engineer would likely be reimbursed for the replacement equipment for the HVAC system. Now, the key here is that the language in the policy allows for reimbursement of reasonable and necessary expenses. Every claim always depends on the facts presented, but really I would call this being able to sleep at night coverage, just knowing that it's there in case, based on the facts that your insurance carrier has a solution to help your firm correct a mistake before a claim is made, which will not only help preserve your firm's reputation with the current client and contract, but also help with future contracts as well.
Okay, thanks, Mark. We'll move on to the next one. So let's talk about faulty workmanship exclusion. Okay, in a nutshell, in addition to understanding what's covered in your policy, you want to make sure that your professional liability policy doesn't exclude important things that matter. So now we're talking about exclusions to coverage. So here on the screen, you can see in the Victor CNA policy that it says that the insurer will not defend or pay faulty workmanship claims. You see that at the top under the word exclusions in all caps. But then highlighted here, and I tried to blow it up here on the right, is an exception to that exclusion of coverage. So Mark, walk us through a scenario or two where a design firm would actually want faulty workmanship coverage, or it's relevant, and where it makes this exception to the exclusion important. What kind of claim could arise to make this exception meaningful to design firms?
Well, as a starting point, I think the reason you'll find a faulty workmanship exclusion on an AE professional liability policy is because typically the services listed under the exclusion do not meet the definition of professional services as defined by the policy, like we previously discussed. This is due to the fact that they typically don't involve the design of a project, but rather the execution of a design. And coverage for these services could instead typically be found under more commonly a contractor's professional liability policy rather than an architect or engineer's professional policy. However, the reason you'd want an exception to this exclusion is because some physical services may need to be performed in order for a design firm to provide their professional service. The line between professional services and construction can, of course, sometimes land in a gray area. And in certain instances, the exclusion really shouldn't apply. In particular, what comes to mind up front in some of the services is some of the services performed by forensic engineers, geotechnical engineers, testing labs, and potentially interior design firms. A quick example would be an interior design firm. They often supply furnishings as part of their interior design services. Now, supplying furnishings could involve some level of workmanship issues, and you want to be covered for that, which is what this exception would provide for. Similarly, a geotechnical consultant might have to drill or sample material to perform their evaluation. And if a claim were to arise in either of these situations, the exception to the faulty workmanship exclusion could come into play to aid in coverage being provided under the AE policy form.
Okay, great, thanks. Thanks for that, Mark. All right, let's move on to the very last technical topic for the day, and that is subrogation waivers. Yikes. This is a really technical, legalese sort of term, and I'd like to simplify this significantly for design firms. So again, here's a screenshot of the Victor policy where this concept is described. Mark, help our audience boil this concept down. Why is this relevant for design firms?
Yeah. In professional service contracts, you're probably frequently asked to waive your insurer's subrogation rights. And what this essentially means is that your client does not want to deal with your insurance carrier initiating a recovery action against them or others to help defray claim payments that the insurance carrier has made on your behalf. When this demand for a waiver is made, you might have had to go to your agent or broker to have an endorsement issued to comply with the contractual requirement. The Victor policy has simplified the process so you don't have to deal with the hassle of having another endorsement issued during the process of negotiating a contract. The highlighted language here illustrates the waiver of subrogation, and it's becoming increasingly common for not only an insured's client to require a waiver, but also the project owner as well. We've taken this into account with the broad wording indicated here. It states the insurer waives subrogation rights against any person or organization. This is not just limited to your client. It's important to note that the waiver only exists under the policy if the contract requires a waiver of subrogation rights for professional liability. Some contracts do exempt PL insurance, and contractual waivers, such as in the standard AIA contracts, only apply to property insurance. Basically, the bottom line here is that you might want to review your policy for this waiver to make sure it's there to streamline future negotiations. Thanks, Yvonne.
Okay, great. Okay, so now we've talked about some of the basic features that you want to look for in a professional liability policy. Let's switch a bit and talk about provisions in a policy that offer financial incentives and would essentially reward good risk management behavior. These types of provisions are called risk management credits. So what are they and how they work? These are provisions that in the policy, and this again depends on your insurance carrier, but they aim to incentivize good risk management practices by insureds. I would say kind of similar to how an automobile insurance insurer would offer discounts for a good driving record. It's kind of the same thing, sort of. So let's look at how these kinds of provisions work. In the Victor policy, there are two types of credits, and let's flesh those out. Quick note, though, for those of you who are not in the Victor program, definitely take a look at your policy, see if you have similar benefits, and identify whether or not you've been able to take advantage of those credits. Okay, let's move over to the Victor policy. One of the credits you can find in our policy is called the risk mitigation credit. And this is a provision that gives the insured, the design firm, credit for engaging in sound professional practice management. The credit, if given, goes to the insured's deductible. We're not talking about premium here. We're talking about a credit towards your deductible. So that if there is a claim that's filed against you, design firm, you could potentially get a credit of 50% off the deductible with a cap of $25,000 if you meet certain criteria. So let's talk about what those criteria are. So on the screen, you can see to get the credit, you've got to have a written contract. So the insurer, the first time you notice of a claim, you're going to contact your insurance carrier. In this case, you would contact CNA, Victor CNA, and say, a claim has been filed against me. The first thing CNA is going to want to see is the agreement you had with the claimant. That's kind of fundamental, baseline, good professional practice management. They're going to want to see a contract. And the reality is, if the design firm has gone through the effort of documenting terms of service before moving forward with the project, that should be rewarded. But once that baseline is established and the contract has been provided, the insurer then is going to look, and in this case, we're talking about CNA. The insurer will look to see if there are three things on this list that exist, that existed prior to the claim happening, of course. They're going to look to see, number one, were there payment terms scheduled in the agreement? Was there a separate agreement to document certificates of insurance for subs and primes? Did you collect these certificates of insurance? Is there documentation to show pre-project planning occurred to lay out expectations? Was there an independent peer review of your instruments of service prior to delivery to the client? It could be internal or external. Was there another set of eyes, in other words? Was there a process to collect construction input? In other words, was there some level of constructability review? And lastly, did the firm maintain a documented contemporaneous submittal log on the project, including as planned and actual dates? So most of you on the call are probably saying, yeah, we do this as a matter of course. And so if three of these things can be found, including the contract, you would get the 50% deductible. But if you aren't doing these things, we certainly recommend that you do them. They are good risk management practices, and we want to set you up for, hopefully, if the claim were filed, to be able to optimize this credit that's available to you. Okay, the last credit I want to talk about is called the early resolution credit. So like the previous credit, this credit assumes you've been sued, so some claim has been filed against you. And if you work with your professional liability carrier toward resolving that claim within 180 days of the notice of claim, you should get rewarded. That's the kind of the intent behind this credit. It's no secret, as you heard earlier, that defending claims is a very expensive endeavor. It's time consuming for the design firm, of course. It's time consuming because you have to attend mediations, depositions, you have to provide discovery. There's just a lot of work involved, and I know people want to be billing hours, not attending depositions. So it's an expensive endeavor. So if there's any way to resolve the claim within that 180 days, that is, if it can be resolved, you heard about the hammer clause. We do not have a hammer clause in our policy, but if there is any way that it can be resolved within 180 days, then you should be rewarded. And you would be able to get, in the Victor policy at least, an early resolution credit, 50% off your deductible, which, with a cap of $10,000. But, that's an important element that you should know about. Okay, that concludes the high-level discussion on professional liability policy features. Of course, much more exists, and if you all are interested, we would like to host other webinars like this, sort of short, sweet, and simple. Because we know you all are very busy, but we also know you still have a keen interest in keeping a pulse on how to protect your firm through coverage. So if you could, please tell us what you think in the survey link that we send you. Was this simple enough? Was it too simple? Would you like shorter webinars, longer webinars? Just let us know in the survey because we really do want to provide you with the best risk management webinar offering. So I want to quickly remind you that we have a lot of other resources behind this webinar, or besides this webinar. What you're looking at on the screen is a homepage of our School of Risk Management. The very far left tile is where you can find our on-demand risk management courses and curriculum for design firms. These are 24/7 available to all of our policyholders, absolutely free, part of our program. And they are all accredited for continuing education credit by the AIA, and many of them are actually pre-approved as eligible for continuing education credit by state licensing boards. So that's definitely a benefit. So you'll want to take a look at that. Behind the other tiles on this homepage, you'll find some publication resources to help you mitigate project-specific risks and operational risks, get some benchmarking information. We also frequently write on our blog, Victor Insurance blog, so please subscribe, because we are keeping that content very up to date, especially as we navigate COVID and upcoming climate change and everything that's about to happen with the new Biden administration. We suspect there will be a fair amount of activity on the legislative activity on Capitol Hill. So we'll be updating you on that, so please do subscribe. And if you're interested in some of the features that we talked about today, feel free to go to this link here to learn more. Also, feel free to reach out to your broker if you'd like to learn more. And that concludes today's webinar. You should expect an email from us with a survey link within a day, probably by the end of the day. Within that link, as I said, please give us feedback, ask questions if you have any, and here's where you're going to tell us what you would like us to do in terms of reporting for CE. So thank you for joining us. Enjoy the rest of your day, and please, please stay safe.